over again because...
Next guest, the man who issued a Paul Revere-like clarion call warning that sparked the Tea Party movement. Rick Santelli of CNBC joins us on the Common Sense Club and the Scott Hennen Show. Rick, welcome to the show. How are you?
Very well. Thanks, Scott.
I'm ready for a Rick Santelli-like snap today, I'll tell you. I can't even believe it. I'm speaking to Congressman Barton about the investigation of the Solandra scandal, seeing $500 million go to a boondoggle solar panel company, just, tossed to the wind. And on the same day, we have 7 oil companies that are actually creating jobs in this country in criminal federal court today, facing charges over dead birds in North Dakota. U.S. federal court criminally charged by the Obama administration over 28 dead birds found at 7 different sites over 45 days. What has happened to the America we know and love, Rick?
We certainly have run off the rails in terms of leadership, haven't we? I mean, it really is reprehensible. How many times have you heard anybody in the administration talk about natural gas? I mean, it is unbelievable, Scott, that we have what prior to this ramping up of the green movement to insane levels, natural gas used to be considered as good as it gets with regard to clean. Now the administration doesn't talk about it. We really don't have an energy policy. I really don't think that a windmill on top of my car is going to make it so it'll fit in the garage. Common sense is your show, and certainly there's a lack of it in our political leadership.
Oh, it's awful. And speaking of which, we got this, Einstein definition of insanity at play here by the administration. Raise taxes, that'll fix the economy. And the Fed saying they're going to go for some, more stimulus, more of the same here, despite everybody saying, please stop, don't do it anymore. What do you make, first of all, of the Federal Reserve move on this shorter-term security sell-off?
Well, first of all, it could have been a lot worse, Scott, and maybe it gets a lot worse in the future. But in essence, what the Fed did was it isn't quantitative easing the way it has been, which is a very bad thing in my opinion. This is different because the $400 billion that they're buying in longer-dated treasuries, they are selling an equal amount in shorter-dated treasuries. Okay, so their balance sheet isn't going to grow, and that's the part that I don't like. However, think about it this way. One of the simple premises of investing, and I'm talking simple, is that you look and assess a certain amount of risk, and as an investor, to assume that risk, you get a certain amount of reward. What the Federal Reserve has engineered is the last bastion of a market pulse that isn't being manipulated or controlled like a banana republic is longer-dated treasuries. They have a bit of a mind of their own. This process is causing the 30-year bond, whose yield not many weeks ago was around 3.5%. Yesterday it was flirting with 3.25%. Today it's potentially flirting with 2.8 to 2.9%. That rate is going to continue to fall because that's one of the areas the Fed's going to concentrate on buying. By putting interest rates in this kind of flat mode, it really does take the incentive away from investors to have a pairing between risk and reward. And to take it a step farther, we see that the dollar today is strong, and that is actually a bright spot, but not completely. The dollar suffered from all of these programs, quantitative easing 1 and 2, and since, as I stated, what they did yesterday isn't expanding their balance sheet, the dollar's getting some breathing room. But it's an unfortunate perfect storm of negativity because China's growth has been slowing rather dramatically, and they had data recently that accentuates that. Europe is just an accident looking for an intersection. Anybody that sugarcoats that is not dealing in reality. So all of those influences, when paired up with a Fed statement that was actually quite accurate because it isn't looking for any surprise growth in the near future, all created a perfect storm where commodities are getting trounced, and that's the dark side of the dollar. Many listeners probably were looking for some place to hide while Mo, Larry, and Curly tweaked with every facet of our market economy, and maybe gold is a place that many of them were trying to hide out, and that, of course, is down $75 today.
By the way, while Mo, Curly, and Larry are at it, they tell us what they want to do is try and give some modest help to the economy and reduce borrowing costs and raise stock prices.
Borrowing costs for who, Scott? See, this is the key, Scott, there are plenty of people who cannot interact with these interest rates no matter how low they go. One of the aspects of my rant you alluded to in February of 2009 was you could take interest rates and put them in the negative territory, even lower in the negative territory, and it doesn't change the dynamics that housing isn't doing well. Nobody can get a loan no matter how low these interest rates go. We saved banks for what purpose again? And here the banking stocks are going back down. We saved GM to export to China. The president talks about trying to save jobs in the States on one hand, where he wants to take away the tax advantages of owning municipal securities on the other. It's this, make a left, make a right, hit the gas, hit the brake. Not only is it just doesn't make any sense. When you think about it and take a step back, not only do we have this yin and yang of insanity going on, there is no long-distance strategy any prudent business can count on, because everything is going to change. You get a tax code you like today, the next Congress or the next administration or this one can change it in a fell swoop. This is not the way it's supposed to be. Consistency. They've always looked to the U.S. markets as the bastion of liquidity, the perfect country to invest in, because the long-term view is you're going to have stable politics, a stable country, a stable central bank, and that stability has given way to just knee-jerk operations that nobody can expect or predict.
Last question on another yin-yang. President before Congress, let's lower taxes, payroll tax, let's cut some spending. Then the president Monday, hey, we're going to raise taxes on the rich, the Buffett rule, everything else. Again, within days, completely mixed messages. What will the outcome of that be?
Listen, I've pretty much heard all I want to hear about Warren Buffett. I'll probably see him in a couple of weeks. I think he's doing a fundraiser in the North Shore suburbs of Chicago for the president. Let me tell you something. Warren Buffett pays a lot of taxes. It's just that the way he pays taxes, various investments, capital gains, there's a lot of differences for him versus a normal individual. At the end of the day, let's keep it really, really simple, Scott. We have a spending problem, and any time we address it, what all politicians seem likely to do, especially the president and his inner circle, is to promise religion down the road and basically be spendthrifts in the here and now. And considering that I have never seen Congress really deliver, any Congress under any president, something that far down the road, I think we're all getting sold a bill of goods. Stop spending, stop spending, stop spending. And if that can actually be accomplished in any way, shape, or form, maybe we can revisit some of these issues like infrastructure down the road. I just think that the trust in government is at such a low point. We can't go through the stimulus all over again, because nobody will ever forget the line that the president uttered. I guess it wasn't really shovel ready. Many people just can't get that out of their brains.
Me either. Or the fact that the higher taxes somehow are going to fix the economy. Rick Santelli, great insight as always that we watch on CNBC, and get a snippet of today on the Common Sense Club. Thanks for joining. We appreciate it.
My pleasure, Scott.
All right, thanks to him, to Stephen Moore of the Wall Street Journal, Congressman Barton, Congressman King, Andrew Breitbart, Ellen Radner, and Byron York of the Washington Examiner.